Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic, are commodity stocks untouchables? Many people have almost made it into a science to run down cyclical businesses. But even the most value-added businesses or consumer-driven businesses tend to have long cycles. Somewhere people are forgetting the phase 2003 to 2010 when FMCG companies had it rough. Several of these companies went public during that time. The Pidilites of the world, the Maricos of the world went public during that time. HUL had its worst moments between 2009 and 2010. It is not unusual for businesses to go through cycles. So let us accept cycles as a reality. Some businesses have shorter cycles, some businesses have longer virtuous cycles, but cycles are here to stay. So commodities are essentially cyclical businesses where long phases of difficulty are followed by very short bursts of euphoric performance. The question is, should you completely miss this? My answer is no. You should know how to play it. And commodities are definitely stocks where you have to understand where you are in the cycle, right? Most people enter commodity stocks after they get evidence of performance and after they see the consensus. This is not the way to invest in commodity stocks. Most of the guys who run down commodity stocks are people who are hedging their horses, who don't want to stick their neck out, who want to convince others on something easily and who don't want to play contrarian. So they find it very easy to talk highly of decent businesses all the time. That's where I would put the FMCG and pharma trades. But remember one thing, in 2015, they overhyped the pharma trade, and what followed for 3 years was enormous pain. Because at a very high valuation, people were seeing no risk, right? Now contrast that with what we are having now in FMCG. It's the same thing. On the other side, in 2019, pharma was untouchable. People said that it is a commodity, anybody can make, everybody is getting license to produce, there is no differentiator, the number of buyers are coming down, so pricing power is down. Everything changed in 2 years. So effectively, what you think is a defensive industry, pharmaceutical, turned out to become a commodity industry for a brief burst of time, and now again you are seeing great virtues in it. It's all in the eyes of the beholder. And the same thing applies to other commodities which you don't perceive as sexy. Maybe sugar, maybe metals, maybe aluminum, maybe copper, maybe rubber, maybe chemicals. Every sector follows cycles. The nature of the cycle varies. Every cycle starts when asset creation stops, and when people don't want to create assets, there is fear about asset creation, and every cycle ends when asset creation is happening at its peak pace. People don't fear creating assets, they borrow heavily or raise equity and create assets indiscriminately and want to grow at a rate which is much higher than their historic growth rate. If you look at commodities today, nobody wants to create assets yet. Asset sweating is happening. People have assets which they have created at a reasonable valuation. The prices of commodities is in their favor. Profitability is increasing at a rate which we never imagined. Debt is getting paid down very fast, which means that enterprise value can grow and equity side can benefit significantly from that. So that is the scenario. Commodities are not untouchables. Think through what I am saying and you will see the logic of having a fresh look at this very cyclical business. After all, life runs in cycles. All businesses run in cycles. Defensives have their cycles. Why not commodities? If you like this video, you can share this video with your friends who are passionate about equity investing. Do share the course with us on this journey with I Thought Wealth. Thank you very much.